started and how you ended up starting 51 Capital.
Well, I started off as a broker, so I was in a small broking shop prior to the fund, and then we essentially set up Fiftyone Capital after leaving that, and basically just thought it was better to run a fund than sell stocks, I guess. So we set it up in 2018, April of 2018 we got started.
Yep.
So just gone past 2 years of running, and we've done pretty well over that period.
You picked up some awards, haven't you?
Yeah, so first year we had Best Emerging Manager, Best New Manager, and Best Emerging Manager for another Asia hedge as well. So pretty much Oz specific. But we've obviously seen a lot of market volatility recently, and the whole strategy of running a long short fund is that you can hedge the downside. So when the markets fall, you actually don't lose money, and that was sort of the whole premise of setting it up. Whereas in broking, and obviously being on the ASX only, you're only buying shares and making money when they go up, but markets go up and down. So yeah, when we set it up, that was sort of the theory. Have a broad mandate, allow us to sort of gain access to the best companies in the world, or short sell the worst companies in the world.
Yeah, right.
And so far it's been pretty good. So it's a funds management game is it's a pretty tough. It's a very rewarding industry, but also very tough in that you can have one bad month and you can undo a lot of hard work. So it's really a constant focus to try and make sure that you're generating returns and preserving clients' capital essentially, and growing the funds. So obviously we're a growing business, and we keep reinvesting heavily into the business infrastructure, and that's partially how we got started in talking and keep us on track as to where we should be, I guess, allocating our capital and how we can offer clients the best services going forward. So that's sort of the quick history of where we came from.
So what size is the fund that you're looking after?
So we're still just shy of 50 mil at the moment, and obviously it goes up and down with the market. We try to grow consistently. Really, a funds management business starts to be good when you get to sort of over 100 mil. So that's sort of our 12 to 18 month target, really. 18 month to 2 year target to get over that price, or over that funds under management.
Yeah.
And at those levels, it starts to be a bit more of a scalable business. Essentially, I think there's costs in obviously operating the fund, and at more scale, you get better unit economics per investor as well. So, and also access to deal flow, access to corporate access as well. If you're a bigger fund, you can probably speak to larger companies and gain access to better deal flow, which again you can try and generate more return. There is downsides of being too big as well. You limit the size of the investments that you can actually take or be part of.
Yes.
So it's a balancing act, and for now our goal is just to get to that first target and make sure the business is sustainable and growing. And then we'll assess, I guess, based on returns. Our view is, if you get too big and you start to impact the economics of the fund and the returns. Obviously, I'm a big investor in the fund myself.
That's right.
And I'm I guess handicapping myself or hurting my potential returns. Then it's not worth growing for the sake of growth. And I think that's a problem that a lot of managers can run into as well.
Yeah.
So yeah, that's the plan. Just to take it slowly. It'll be a good problem to have when someone comes up to you and says, "Here's 100 million or 200 million. Will you take it?" And try and work out whether that's a good idea or not for a business decision.
Exactly.
It's very hard to turn down sometimes, but that's those are the decisions that we'll have to face in the